Hello and welcome to Mint Funds Update. My name is Marek Krzyczkowski and I'm joined by Ryan Falls. Today we will talk about markets and what happened with our funds last month. Firstly, just starting with our usual scenarios. We still believe that the soft landing is the most likely scenario out of the 5 that we look at every month. However, what you will notice is last month that probability was slightly higher, over 40%. So there is a slight reduction in this probability. Nevertheless, we still think that is the base case in terms of our positioning moving forward. Now, one of the key drivers of our view, and this is very similar to what we said last month, is the fact that inflation is moving lower. We see that on a number of different measures. One of the key things we've discussed last month, shelter inflation, we expect that to move lower as we progress over the next few months. And here on the charts on the left-hand side, you can see that the shelter inflation normally follows the new rent index with a bit of a lag. So we expect the relationship to actually materialize over the next 3 months. The other part of the inflation story, which is here on the right-hand side, is this inflation coming from what we call cyclical inflation. So acyclical inflation component is all the goods, and we saw the goods prices coming down. But cyclical inflation is what is actually driven by the Fed and central banks' policies. And we can see that that cyclical part of the inflation has been coming down, but still has a long way to go. Now, the other thing which has been discussed over the last few weeks and is very topical is actually the strength of the labor market. So there is a concern that as labor market is strong, the wage growth will continue, and therefore central banks won't be able to cut rates soon enough to prevent a so-called hard landing or recession. However, what I wanted to show you is 2 charts from the US. So yes, it's true that there are no cracks in the job market as we speak at the moment. In fact, it looks like the last 3 months, the jobs in the US have actually picked up. The trend has picked up. However, this is really looking at the rear mirror. And what we want is to look forward. What we see is the hiring intentions have been coming down quite sharply. And the private payrolls growth normally follows that intentions by a lag of 3 to 4 months. So what we expect is by mid of this year, probably by June, the employment markets should soften. We should see inflation continuing the downtrend, which would allow central banks, the Fed in particular, to cut rates, if not in June, and then in July at the latest. Thank you.
Thanks, Mark. I'm Ryan, and I'll take you through the Diversified Income Fund and also Diversified Growth Fund performance from March. Starting now with the Income Fund. So asset class performance was broadly positive in March as equity markets continued to rally and bonds ground higher. Fixed income was our top contributor, plus 0.8% in March, and Australasian equities contributed plus 0.5%. Global equities actually came in flat for the month. Turning to the individual parts portfolio, with the positive contributors first. So our top positive contributors domestically were Contact Energy, so up 7.2%, and Goodman Group was up 13.1%. Goodman Group, and specifically, it serves on analysts raising their price targets on the view that they'll continue to benefit from their data center exposure. Within our global equities, we have Cigna Group up 8% and Novo Nordisk again up 7.5%. Novo Nordisk is a regular feature in these slides, and it received some welcome news in March that their weight loss drug Wegovy got FDA approval to market the drug as risk reducing for both heart attacks and strokes. This is in addition, obviously, to the weight loss is the primary function of the drug. Also, just to note, we had interest rates dropped in New Zealand market. This is on the back of concerns for a sustained slowdown in the macro environment in New Zealand, and this is off the weak GDP release in March. So, as an example, the 5-year New Zealand swap rate dropped 18 bips over March, and this is obviously beneficial to us and our long duration positioning within fixed income. Turning to the negative contributors for March, tourism holdings within our Australasian equities was down 3.6%. And this is just momentum from a poor February and news in a generally weaker macro environment with that weak GDP result weighing on the stock's performance. Within our global equities, Reckitt Benckiser Group was down 9.7%. That also struggled in March after a poor February. This was due to a court verdict in the US in respect of one of their baby formula products and the potential for liabilities for future claims. Turning now to the growth fund, so asset class performance was entirely positive for March. We had global equities up 0.8% as top positive contributor for the growth fund. Australasian equities was next, up 0.6%, and then fixed income came in at plus 0.2 for March. So again, positive contributors for the growth fund, we had Novo Nordisk and Oracle Corp. Looking at Oracle Corp, it had its biggest one-day rise since December 21 after reporting a spike in bookings in its cloud computing business. And this demonstrated progress in capturing market share in what is quite a competitive market. Domestically, within Australasian equities, we had Somerset Group was up 3.2%, and that was them continuing their strong run after they released results in the very tail end of February. Turning now to negative contributors, within global equities, we had Accenture Incorporated down 7.5%. And they struggled as they announced a downward adjustment to its annual revenue projection. And they've cited a slowdown in their consulting market, and they have also previously announced job cuts across the tech and consulting divisions. Domestically, Circle was down 3.7%, and this slid on news that its competitors are merging, so it's Amex GBT and CWT, and this is somewhat of a headwind for their ambition to increase market share within North America.
Well, thank you for listening. If you have any questions, please send them to info@mintasset.co.nz.